Hey everyone, and welcome back to the channel. Today, we're diving deep into a company you probably think you know, Meta Platforms, formerly Facebook. But trust me, what's happening under the hood is far beyond just social media posts. We're talking a complete reinvention, and it's making some serious waves in the financial world. Visual, Meta logo transitioning from old Facebook logo. On-screen text. Meta Platforms, beyond social media. For years, Meta was Facebook, Instagram, WhatsApp, the social media giants. But back in 2021, they famously rebranded, signaling a massive pivot towards something called the Metaverse. And honestly, the market freaked out. They lost a staggering $600 billion in value as investors questioned if it was all just hype. Visual, graph showing Meta's stock price drop in 2022. On-screen text. 2022, $600 billion market cap loss. But Meta, led by Mark Zuckerberg, didn't just sit there. In 2023, they declared the year of efficiency. They cut 21,000 jobs and completely reshaped their technology to focus on one thing: artificial intelligence. This wasn't just about saving money, it was a strategic move to become an AI-first company, aiming for something they call personal superintelligence. Fast forward to today, April 2026, and Meta is valued at $1.6 trillion, pouring billions into AI infrastructure. They're essentially building the open-source AI infrastructure of the Internet. Visual, montage of AI-related imagery, data centers, smart glasses. On-screen text. 2023, the year of efficiency. AI-first paradigm shift. So, how do they make their incredible money while pouring it all into AI? That brings us to their cash cow, the family of apps. Think Facebook, Instagram, Messenger, WhatsApp, and their newer platform, Threads. In 2025 alone, this segment generated nearly $200 billion in revenue, mostly from advertising. Visual, logos of Facebook, Instagram, WhatsApp, Messenger, Threads. On-screen text. Family of apps, the cash cow. Now, this isn't your grandma's advertising. While companies like Google excel at intent-based ads, meaning you search for something, and they show you an ad, Meta has mastered discovery-based advertising. Their advanced AI algorithms predict what you want before you even know it, showing you relevant products in your Instagram Reels or Facebook feed. It's like having a mind reader for advertisers. Their Advantage Plus automated ad suite made this even easier for businesses, boosting ad performance by an estimated 22%. Visual, split screen, Google search bar versus Instagram Reels with a product ad. On-screen text. Discovery-based advertising, predicting your needs. And it's not just the old guard. WhatsApp, with over 3 billion users, is now starting to monetize through AI-driven business messaging, helping companies talk directly to customers. And Threads, their Twitter competitor, launched in 2023, already has 450 million monthly users, contributing to ad revenue and giving Meta even more data to feed its AI brain. This cross-platform data creates a data moat that's incredibly hard for competitors to cross. Visual, WhatsApp business chat interface. Threads app screenshot. On-screen text. WhatsApp and Threads, new growth engines. But Meta's vision goes beyond your phone screen. Enter Reality Labs. While once focused on the Metaverse and VR headsets like Quest, their priority has dramatically shifted. They're now building AI interfaces, specifically lightweight, stylish smart glasses like the Ray-Ban Meta. Visual, Ray-Ban Meta smart glasses in use, showing contextual AI info. On-screen text. Reality Labs, wearable AI for personal superintelligence. Why glasses? Because to build personal superintelligence, the AI needs to see and hear what you experience in real time. Imagine your glasses identifying a landmark for you, or suggesting a recipe based on ingredients you just looked at. This isn't just cool tech. It's Meta's strategy to bypass mobile operating systems like iOS and Android, establishing a direct connection with users through their own hardware. It's about owning the next computing platform. Visual, animation illustrating AI seeing and hearing through glasses, then providing information. On-screen text, bypassing mobile, direct user connection. So how has all this played out financially? After a challenging 2022, Meta has roared back. Their revenue hit over $200 billion in 2025, growing at an impressive 22% the year. The year of efficiency truly paid off, with operating income soaring. Even with a slight net income dip in 2025, that was largely due to a one-off tax charge, not operational issues. Their core business is incredibly profitable. Visual, simple bar chart showing Meta's revenue growth 2021 to 2025. On-screen text, financial resilience, $200 billion plus revenue in 2025. Now, traditionally, Meta reinvested everything. But in 2024, they started paying a quarterly dividend. It's a modest payout, only about 9% of their earnings, showing they're still prioritizing huge investments and buying back their own stock. In 2025, they spent over $26 billion buying back shares, reducing the total number available and boosting value for existing shareholders. Visual, dividend, icon and share buyback icon. On-screen text, capital allocation, dividends and buybacks. And here's a blockbuster projection. Analysts believe Meta will surpass Google as the world's leading digital advertising platform by the end of 2026. Their discovery model is growing twice as fast as Google's intent model. This is huge. With 3.58 billion daily active people across their apps, they have an unrivaled user base and a massive amount of proprietary data to train their AI models. A social graph. That's a huge competitive advantage. Instagram Reels, in particular, is now as good as TikTok and YouTube Shorts at making money. Visual, chart showing Meta projected to overtake Google in ad revenue 2026. On-screen text, Meta to surpass Google in digital ad revenue. When you compare Meta's profitability to tech giants like Google, Microsoft, and Amazon, they stand out. Their gross margin is over 81%, meaning once their infrastructure is built, adding more users costs almost nothing. They're incredibly efficient, with a strong operating margin and a fortress balance sheet of $81 billion in cash. This lets them fund their massive AI investments without batting an eye. Visual, comparison table of gross and operating margins for Meta versus peers. On-screen text, profitability powerhouse, sector-leading margins. But what about the actual AI? Meta has a two-pronged strategy. First, they're building an open-source ecosystem with their Llama models. They essentially give away the core AI brains for free to developers, making Llama an industry standard. Their latest, Llama 5, released in April 2026, is described as having recursive self-improvement, meaning it can literally learn to think better on its own. Visual, Llama, logo/illustration. On-screen text, Llama, open-source AI infrastructure. Second, they have a proprietary, high-margin business called MuseSpark. This is their premium AI, accessed via an API, which can orchestrate multiple AI agents to solve complex problems, competing with the likes of OpenAI's GPT 5.4. MuseSpark is already being integrated across Instagram, WhatsApp, and Facebook to power things like advanced shopping assistants. This dual strategy lets them dominate both the open-source and premium AI markets. Visual, MuseSpark, logo/illustration. On-screen text. Use Spark, proprietary premium AI. To fuel all this AI, Meta is even building its own custom silicon chips, called NTIA, working with partners like Broadcom and TSMC. This vertical integration helps them reduce reliance on third-party providers like NVIDIA and control costs, especially for their daily ad recommendation engines. They're literally building their own supercomputers for AI. Visual, image of a microchip/data center racks. On-screen text. Custom silicon, building their own AI supercomputers. Now, it's not all smooth sailing. Meta faces significant regulatory challenges, especially in Europe. They've been fined for things like their consent or pay model, and WhatsApp's AI policies are under investigation for potentially breaching competition rules. There are also ongoing lawsuits concerning the impact of their platforms on mental health. These are real distraction risks that could lead to big settlements or changes in how they operate. Visual, EU flag, court gavel. On-screen text. Regulatory headwinds, fines, and lawsuits. And we can't ignore the risks. That projected $135 billion in capital expenditure for 2026 is an enormous bet on AI. If the AI payoff doesn't materialize, their margins could suffer. The competitive landscape is also brutal, with rivals like TikTok for attention and OpenAI/Microsoft for AI talent and compute power. It's a constant arms race. Visual, pile of cash/money bags. On-screen text. Risks, massive spending, regulation, intense competition. So what's the takeaway for investors? Meta has successfully pivoted from a social media company to an AI-first powerhouse, aiming to be your personal AI agent across all its platforms and wearable hardware. Their family of apps remains a cash cow, funding massive bets on the future. Visual, Meta logo with AI first surrounding it. On-screen text. Meta, a personal AI agent powerhouse. The stock currently trades at a forward PE of around 19x, which is the cheapest among the Magnificent Seven tech giants since 2024. This suggests the market is still a bit cautious about the high spending and regulatory risks. But for patient investors who believe in Meta's AI-driven resurgence and its undisputed platform dominance, this could be a really attractive entry point. They're not just keeping pace with the AI revolution, they're actively rewriting the rules. Visual, stock chart showing attractive entry point. Arrow. On-screen text. Investor's dilemma, value versus growth. What do you think about Meta's AI pivot? Let me know in the comments below. Don't forget to like this video and subscribe for more deep dives. We'll see you next time.